Welcome to This Week in Crypto from K33 Research. Today is June 26th, 2026. A written version of today's analysis is available at k33.com/research. This week, one story stands above the rest. Prediction markets are moving firmly into the financial mainstream. What started as a crypto-native niche is now attracting some of the biggest names in traditional finance, while regulators are increasingly being forced to decide where investing ends and gambling begins. At the same time, regulation continues to reshape the competitive landscape for crypto exchanges, and traditional asset managers keep finding new ways to bring Bitcoin into conventional investment portfolios. Let's start with prediction markets. The biggest development came from Charles Schwab, one of the largest brokerage firms in the United States. Together with CBOE Global Markets, one of the world's largest derivatives exchanges, Schwab is launching binary options that allow investors to make simple yes or no predictions on where the S&P 500 will close. They are not offering sports betting or election markets like Polymarket. Instead, they are using existing options regulation to bring prediction-style products into traditional financial markets. That is an important distinction. It shows that prediction markets are no longer just a crypto phenomenon. Traditional financial institutions now see them as a legitimate product category. At the same time, activity on existing prediction market platforms continues to accelerate. The FIFA World Cup has driven more than $2 billion of trading volume on Polymarket in just the opening days of the tournament. Kalshi has also reached a new milestone, with open interest surpassing $1 billion for the first time. Reports suggest the company is now seeking funding at a valuation of around $40 billion after surpassing $2 billion in annualized revenue. That tells us this is no longer just a retail trading story. Institutional investors are increasingly paying attention as well. As the market grows, regulation is becoming increasingly important. Kalshi is challenging the state of Illinois after new legislation attempted to impose state licensing requirements on prediction markets. The company argues that, as a federally regulated exchange overseen by the U.S. Commodity Futures Trading Commission, it should only be subject to federal regulation. However that case is resolved, it will likely help define how prediction markets are regulated in the years ahead. Regulation was also front and center elsewhere this week. Binance withdrew its MiCA application in Greece, while reiterating that it still plans to secure a license elsewhere in the European Union before the July 1st deadline. The story highlights just how important MiCA has become. Access to the European market increasingly depends on regulatory approval, and the largest exchanges are now adapting their strategies accordingly. Finally, traditional finance continues to find new ways of incorporating Bitcoin into mainstream investment products. Franklin Templeton has filed for exchange-traded funds that automatically reinvest stock dividends into Bitcoin exposure. It is another example of asset managers looking beyond simple Bitcoin ETFs and developing products that fit naturally into diversified investment portfolios. If I had to summarize this week in one sentence, it would be this: crypto continues to influence traditional finance, but the relationship increasingly goes both ways. Prediction markets are moving into established financial institutions, asset managers are expanding their Bitcoin offerings, and regulation is becoming one of the biggest competitive advantages across the industry. The lines between crypto and traditional finance continue to blur. Thank you for listening to This Week in Crypto from K33 Research. Subscribe for future market updates and visit the K33 website and go to the research section to read the full report and explore our latest research.